My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS over a decade. I've been in private practice for I don't know, 4 decades. It makes me old as hell. God, it sounds old. Anyway, welcome to my YouTube channel. There are no more than 5 minutes. I like to make them short, sweet, to the point. We are available for a consultation or for representation. And today I want to talk to you about the trust fund tax and who IRS generally finds responsible for those taxes. As a former revenue officer, I don't know, I worked 1,000 probably of these cases, maybe, I don't know, just a lot. I made trust fund recovery determinations and held people responsible for taxes. And if you right now have noticed that they want to set you up on a trust fund liability and know who they're setting up and why they're setting you up, what happens is a revenue officer like me would go out and look around at the company, take interviews, look at corporate resolutions, bank signature cards, who wrote checks, interview people. And by the way, if you need representation in this area, there's no better and nobody better to represent you than former IRS agents. But I want to familiarize yourself with that form 4180. The revenue officer should have come out and taken that form. If they haven't, they're going to, because it's the way they determine who's responsible. As a revenue officer, when you work a lot of these cases, you go through these pretty quick and you know who's responsible. But if you're an owner, you're on the bank signature cards, you're on corporate resolutions, pretty good chance that you're going to be held responsible. But there are defenses. But I want to go through the primary questions that they're going to ask. And there's probably 8 of them. So one of them is who determined financial policy for that business, who authorized payments, who authorized bills, who authorized creditors to be paid, who made those decisions, who signed and reviewed and authorized payroll tax returns, who signed the 941s, who signed the corporate tax returns, who made the federal tax deposits, who controlled, who had the right to hire or fire, who went ahead and put out job orders and descriptions and made the schedule. So IRS, just so you know, is going to look at the preponderance of evidence there. If you've just done 1 or 2 things and you weren't an owner, you certainly probably can get off the hook. There are court cases both ways. But just understand that you need a good, credible defense if IRS is going to set you up for the trust fund penalty, because the revenue officer generally likes to throw a broad net out there and hold everyone responsible. You came in the company, you did this, you signed a little thing, you made a call. IRS wants to set up as many people as they can so they got a better chance to collect the tax. Don't fall for that malarkey. Don't let the IRS sales talk you when you know you're responsible. You better make sure you get a good defense and you're not held liable, because if you are, then that means IRS is going to go after you personally. You got to remember, you have an appellate right here and you can go to tax court on this issue. You want to fight the trust fund penalty as much as you can. We're available for initial consultation and representations. Like I said, we work thousands of cases, but IRS will take their time and make the true determination on who's responsible. Usually, when IRS makes that determination, if you go to appeals, you're going to win 40% of the time, but you have to have a case. You've got to show why you're not liable. You have to have affidavits from other people and to show someone else controls you. That's what this is at the end of the day. So anyway, I just wanted to let you know you're welcome to contact us. You have our email. You can text me, do whatever you need to, but don't get set up for this penalty. Thank you.